But the law says a taxable person is someone who is supposed to be on the register, even if they have not registered, or who expects to have registered, who expects to undertake transactions that will put them in the VAT threshold within a period of 3 months. So if you're a small business and your intention is to get to a level where you're able to make large supplies, especially because most of the money is made by doing either mass sales or doing large supplies. So you can only make large supplies to large businesses that are big buyers. And because they need to run away from tax risk, they cannot work with a business that is informal and has not complied under but either VAT or income tax obligations. So this, the insistence on operating informally, it affects, it stagnates the business. So you have a small business for which you have dreams and intend to grow it into a behemoth, but you cannot grow it if you're not able to comply, because the people that buy from you will need you to comply in order to run off from exposure to tax risk that comes from your non-compliance. So the businesses that are running off from EFRIS are doing a disservice to themselves, because if you can't do business through EFRIS, then that means you cannot make supplies to the big businesses, and to make big money, you have to make big supplies. The big buyers are compliant. The consequences of non-compliance with EFRIS is here. I already discussed that. If there is no receipt, then deduction is allowable. Still under VAT, if there is no receipt, then you cannot claim input VAT. Before the introduction of EFRIS, it was possible for a taxpayer to cook up figures and say, I employ such and such a number of people, I bought such and such a number of, say, if I have to give an example of people someone who deals in this kind of equipment, say I bought such and such a number of computers for use in my business, and I need to deduct these expenses. So before then, it was possible for a taxpayer to cook up those figures and claim expense and claim deductions that could not be supported. But now it's not possible. The transaction must have taken place through the EFRIS system. If you don't, then you will not, there is no way to support. They will disallow it, and even if you come to us, we will not help you. Because you must prove that the transaction took place. That's what the law says. You must prove that the transaction actually took place. And that goes back to the point I made earlier, that some of these rules are ingrained in the day-to-day fabric of running a business, in such a way that that way you need to take constant advice, because some of them are not obviously, they're not obvious to the businessman. Yeah.